high quality. Well, I'm going to get into this room. I'm going to have you send him as soon as he sends me his email.
Okay.
He sent me a LinkedIn message yesterday, and I said, "What? You know what? He's trading by himself." I said, "He'd be a great addition to the room. Phenomenal trader, um, and a great FX trader. Great." So we'll get him involved too. So another good voice. You might want to let him get a little taste.
Yeah, my pleasure. Send me Janice's email too, or she can just.
I'm going to send it to you right now.
Or have her just log into my website, and then I'll just put her in the whole system.
Yeah, I'm going to send it to you right now.
All right. But I'm looking at for the silver. I don't think it backs off much until it gets up to close to $33.
Well, I was looking at the pivot number, the what's the call number, matrix this morning.
Yeah. Hey, Judd, how you going?
Hey, Andrew, we're here. Yeah, I kind of backed off there. I'm just looking at, classic another 100 Howard, what it's going to do.
I don't know. This has been on a tear. Really kind of interesting is the silver copper, which is reaching par. And think about how depressed that was over the period of time when they were buying copper in anticipation of massive infrastructure. And the silver couldn't get a bid. Now you can't stop it. And that was kind of, I thought, a really interesting part of yesterday's conversation with those two on some of those issues of leasing and very interesting. Very, very, very interesting. The data, again, it's meaningless. They try to make a story out of an improvement in jobless claims. It's not going to stop. And it's interesting. Let me tell you, there's a piece on the Project Syndicate. I don't know how many people in this room get it, guys, but they can also find it on Forex Factory. By Raj Rajan, the professor, and who was a previous, and who was at one time the governor of the Bank of India, Reserve Bank of India. And he too, it's an interesting piece if you can find it, because he raises that issue. He doesn't call it what I call it, the social justice, but he talks about the danger of when you invoke through no fault of their own from a central bank stance. I think it's really worthwhile. I think first of all, they should put him on the Fed. He teaches at the University of Chicago. He is so pragmatic and has such a good sense of the global effects of monetary policy. He's a needed voice in that discussion. The problem with the Fed is that it's groupthink par excellence, and they need different voices. It's not like I'm a great fan of Judy Shelton, that she's a great thinker, but she does change the conversation a little bit. And that's very, very important in this world. Just too much groupthink at these central banks. And it's having, I think, a very deleterious effect upon the world. But
Mr. Harris, can I ask you a question?
Well, you can. I don't know if I have an answer.
So I always can observe when your name comes up. So I totally agree with that, and I think you're one of the men that taught me, not what you think they should do, do what they're doing, yeah?
Mm-hmm.
Because of making money. So I saw gold as of last month was the last domino fell, as I believe, in the fact that the gold against the yen made a new high. The gold against the yuan made a new high 3 months ago, and that was part of the acceleration of that. The gold yen made a new high against the 1980 high.
Right.
Yep. which I only found yesterday. I mean, you may, Judd may be able to see that. And
I'm putting it up right now. We on the right page?
you know, on my Bloomberg, I'm going back to CQG at the moment, but definitely
Yeah.
on the Bloomberg, I have
Yeah, because
gold.
if you look at CQG, because if you use the electronic yen, it's only going to, or electronic gold only going to take you back to 2001. But if you pick
Gold
up,
yen's new high against 1980.
right, wait, hold on, I will put that
Hold
up.
on, I'm putting up the cash right now.
I guess my point is, I'm using Bloomberg data, which I don't necessarily always agree with, but I guess my point is it was just another domino in the game of this whole thing being unraveled. And then, and you're seeing this acceleration going on in the price of gold as vols sort of kind of creeping up and there's more concentration. And I think, I think the game's only starting in terms of the acceleration. And Judd sent a great chart out yesterday or the day before on the NASDAQ against the bonds. And that alerted me to thinking, God, the NASDAQ hasn't even finished its parabolic move either. Because between 1998 and 2000 March, the NASDAQ went up 260%.
Okay, so Andrew, this is going back to a piece from 2017 to 2018, and Judd will know where I'm going with this. So I'm going to convert back because this one is more important to me, and I'm not saying that bond NASDAQ isn't important. It's certainly is critical in many dimensions, but the the S&P bond had made a high on a monthly chart in December of 1999. Again, not insignificant. I'm talking about the SPU bond, okay? And I'm using the 30-year. And it had made that high. I still know the levels very well.
There we go. You can see the lines right there.
So those levels, that was the high, was like at 1635, I think.
Yeah,
On that
1627 was the close, and the high was 47.
So before Ari goes on, what's that chart again?
That's SPU bonds. That's Pitt session. So that goes back to 1982.
So that's long. If you want to buy that breakout, that big range, you're long the SPU, short the bond, right?
Yeah, and you can see that has been the pivot and the spread. It's monster pivot.
Yeah, and I agree. Sorry, Ari, go on.
Okay, so if you look, so it was in September, at the end of September 2017, that for the first time in 18 years, that's why I'm bringing this up, that we take out the all-time high that was made December of 1999, and we know what that was.
That was 2,500 S&Ps.
So we looked at that, and we finally got a monthly, that had been a resistance area, and as our mentor on technical things would tell us because it failed there several times, and that was actually a pretty good thing because you were able to sell the S&Ps because it couldn't take out that high throughout all that. You'll see how many times on a monthly chart and look at how it attacked it. And then at the close of September 30th, 2017, we finally break out. I put it in the blog because I'd been watching it and I had Judd watching it. So there was a lot there. And then we got almost a 30% straight up move over the next year, literally to September 2018. And at September 2000, at the end of 2018, we know what happened then too. And I said, this is way too parabolic. And I really think the Fed was aware of it. It was just so much. And we said, and we got a nice correction through there. And it's only through 2019. I mean, this chart has caught, it's a simplistic, ridiculous chart. Anyone would say, yeah, this is stupid. But meanwhile, it's caught so much dynamic movement that that's what makes it important. And then even when we get the correction in March of April this year, the work it did, it melted through that old high, but that old high was critical, the 1630 area. And then we went down, I don't know, about 13 and a half or 14. But that has been a continual critical area. And this chart still, we're doing a lot of work here, but let's see where we can, if we can close above the 200, it's got work to do here, but it does catch a lot of things. But it should start to go on another mission if the bond market is telling us right. Again, it's the markets are trying to sort out some issues here and find itself, and it's got to get through the bond market. And the bond market is a very critical element here, even though the Fed and the the central banks have just broken the signaling mechanism of bonds. But I've argued for 90
with you on that. But I'm going to push back here on one thing, right?
Okay. Yeah, please.
No, and respectfully, because I have immense respect, sir. Only because when you look at those ratios, the bond market now basically look they can fix it, and they've already fixed the system, right? We know that, right? They've fixed it. Now, if we ever see the bond market behave like it should, like the long end particularly, I suspect we'll know the game's up. But it's not doing that. And I think the bond market's either doing it through the fact that the lens of it's fixed, or through the Lacey Hunt theory that we're still in massive disinflation.
Right.
And that's Lacey's view, right? Lacey and Lacey and Gary Shilling have been right. They've been right for 15 years on that trade.
Absolutely.
And I pay great respect for their view, because, my God, many people have called the wrong trade on the long end for many, many years. When I look at gold yen, which takes the bond trade out, takes the mantras out, I look at gold China, CNH, look at gold against every other currency, look at gold against even the NASDAQ. Like, the gold against the NASDAQ hasn't beaten the NASDAQ's high in 2018.
Mm-hmm.
It's still been the best performer, gold.
Yeah.
So through this mess and through this noise, everyone's telling me now the gold's beaten the dollar. They want to buy it on a pullback. I'm saying good luck. I'm saying the gold's just starting its move.
Is what?
It's just starting. Just starting its move, all right? Because if you look at gold against the Dow, right? So when the whole world went to shit in 08, the gold Dow ratio got to 6. You know the gold Dow ratio is now? It's 13. It hasn't, it's got a lot more to do. So if you get bearish, don't normally short the market. Just buy gold and sell Dow and do the percentage notional, trade. Don't just do the match, just do the ratio. And if you're bullish, just buy gold. Because you want to trade with what they do. I don't like what they're doing, but I have to trade with what they're doing.
Andrew, 100%. To do otherwise is a fool's errand. End of story. It's a fool's errand, and really, it makes perfect sense, because everybody in the mainstream media, meaning CNBC and more, they haven't given this much thought, because they don't want to give gold any credibility, or they haven't for a long time. Now they can't deny it, because you've gone and made new highs. So of course that's a headline story, which I'll feed off of. But the gold and the equities were going up together. Gold faster, and only because it had been stagnant for the last 9 years or 8 years. So it really needed, it did a bunch of catch up. But it made perfect sense that they were going up together, because the equities were representative. There's nowhere really else to go with your money. The bond market is broken, and the gold was taking on a currency, which it always is. Gold is a currency play as much as anything. And because it's a currency play, why it's a store of value, and people were looking for alternative store of value. As long as you're running severe negative real yields, gold does have attains greater credibility. But more importantly, more importantly, and Judd had posted I did a podcast yesterday with the FRA and Tom Luongo and
Yeah, I listened to it. Yeah, it's great.
yeah, and Nick, and again, it's ultimately about central bank credibility. Now, the only ones who can't acknowledge it is Wall Street and the central banks, because to do so, they would have to go to war with gold, right? I state what I know for sure, which was Paul Volcker viewed gold as his enemy. As a central bank chair, he viewed gold as his enemy because gold, he believed, provided signal.
Are you saying Volcker said that?
Yep.
Yeah,
Yep.
I mean, have you heard Russell Napier's? Russell Napier?
Yeah, I read it. I read his latest piece. Yeah.
Yeah. So he was saying, he asked the question of Volcker on, so close to his deathbed, and I think any decent human being who's not a greedy monetarist, which we have effectively in our system. We've taken advantage of the world, the bankers, I think. I want a pure market. I want to be able to buy my Fibonacci's and lose my money if I get it wrong, right?
Mm-hmm.
But no one told me to buy Kodak shares the day before the fucking thing happened. So, it's the game's rigged. We all know that now. Volcker said to Napier, they fucked it when they bailed out LTCM.
No question. I believe that in real time, and I can tell you stories about that because I actually sat on what was called the Financial Product Advisory Committee. I'm the only floor trader ever to sit on a CFTC committee in Washington, and at that time I sat under three chair people, Wendy Graham, Sheila Bair, who I had great respect for, and then the chair was Brooksley Bourne, when she was the chair of the CFTC. Now, Brooksley and I got pretty close because she really had a lot of respect for my trading viewpoints, and I was the only one on the committee who had those kind of views. Everybody else was from some other facets of the industry. A lot of lawyers representing facets. I could tell you stories about that. And I used to go with Judd's dear friend Barry. We had quarterly meetings, and they disbanded the committee when Brooksley Bourne started looking at regulating the over-the-counter derivative market in 1996 and 97, and got the crap beat out of her by Larry Summers, Alan Greenspan, and Bob Rubin. I mean, they beat her. And I did a lot of advising work with her on that, by the way. And
McConnell's done on CNN.
I'm sorry? So, and they beat the crap out of her. Why? Because as well as anybody, that was a huge profit center for Wall Street. And the lobbying effort, I mean, they beat, and Brooksley Bourne was no shrinking violet. Trust me, I have great respect for her. I still have great respect for her. I haven't talked, every once in a while, I have a conversation. But when LTCM fell apart, that committee had been disbanded because they were so angry at her. I called her up that afternoon after I got up off the floor because I was actually trading a lot of Russian rubles. And so I called her, and she said to me something that was very interesting. You're the only one who called, because I said you were so right. But I had actually warned her. She had her chief advisor was a guy, Mike Greenberger, who was really bright. He spent hours with me in Chicago. I brought him to the floor. I explained, and I told her she was going to get the shit beat out of her because she was playing with the lifeblood of Wall Street. And even as she really didn't, but they did. So when I called her, she says, "You're the only one who called." I said, "Well, you're to be congratulated because everything that's taken place here is everything that you were trying to get out ahead of." Now, the saddest part about it, I think, that after the collapse, and that's when I talked to her, because she won the Profile and Courage Award that's given at Harvard University for her stance And I called her when I found out about that. We had a conversation. I said, interesting that they gave it to you, which is probably in 2007 or 2008 that they presented it to her. But it's a stain upon the way the world works. That here she was trying to get out ahead of it as a good regulator, as good policy, and they just wouldn't allow it. The lobbying forces were so great. So when you talk about LTC, I can't agree with absolutely.
But you know what I put on the Fed?
I'm sorry?
You know who I would put on the Fed? I'd put you on the Fed. But
Well,
I know you wouldn't take it. But
I would take it.
No, you would. That's right.
I would take it. Because I have regulatory experience. And
I know you have all that knowledge.
As an outside voice, believe me, Jim Sinclair has been touting that on his JF mindset probably for 15 years. I laugh about it. He says they should put on. But that's.
I love the way you look at the markets, because you look at it in the prism of the fact that you know our job is to not be right. Our job is to make money, which is the headline of Judd's, which is 100% right. And once you get your emotions mixed with that, you become a bad trader.
In 2006 or 7 or 8, it was the CME, which runs this wonderful annual meeting down in Naples. Well, Paul Volcker was the keynote speaker. So a good friend of mine who was still on the board at the time, he says, "Are you coming down?" I said, "No, I was working in New York with Owen Brown. I don't think you know him, but for Solaris, the hedge fund." I said, "No, but I told him, I texted him, I said, ask him this question." Okay. Yeah, it was 2008. I'm pretty sure it was 2008. We can go. And he asked this question. I said, ask him if gold is his enemy, and is he buying gold today? Now, this, I think, was November 2008. I'm pretty sure about that. And so he asked the question in a very open, because they took a Q&A. And he said, "I won't answer the second one. I won't answer the second part, because that would have been an incendiary answer. If he was buying gold, he wasn't going to answer that question." And he kind of danced around the first part, but he talked about the importance of gold. And the guy who asked the question actually got reprimanded because of his sitting position, but he didn't care. He was not one to be intimidated. I don't want to put his name, but anybody who was sitting here, they would laugh, because he's definitely not an intimidator. You can't intimidate him, which is one of the reasons I've always respected him. And it's true. And see, you have no sense of that in the world today. There's no central, Paul, Ben Bernanke said he doesn't understand gold. And he said it several times. He understands Bitcoin, but he didn't understand gold.
But respectfully, again, I find, if I hear those people's name, I feel they'll find their maker in another life, because they don't care about people. Maybe I'm being harsh by saying that, because I think the fundamentals of the way they've gone about it is been. If you weren't even thinking about trying to find inequality and you wanted to deploy a policy, that's what they did.
Well, yeah.
And so gold has crept up on them. Once you get, so I guess what I'm saying now as a trader, and also as a person, and also as an investor, if I look at a chart, right, and if I see a 30-year high gets beaten, I pay attention.
Well, look at this chart, Andrew. This gold copper, is that the biggest inverse head and shoulder you've ever seen in your life?
I'm so hopeless on head and shoulders, but I was trained by the same people that trained you two technically, and I just like when price and time beats. So gold yen today, last month, was the last domino I found. that beat it. So gold is on this screen. So I guess my encouragement to everyone is, you know, think differently about the way this price is behaving, because it's doing it against everything. And it's starting to kick on some bowl. You know, people like Ira are talking about it in the context, and it's a value, but it's also a great traded vehicle, I think. And you got to hold it not just just in dollars. You got to hold it against other classes as well. Would you agree, Ira?
Yes, yeah, no, that's absolutely the case because, you know, again, I see the world in its totality of money flows. But, and I'm going to leave the conversation after this, but Andrew, let's not forget, it was exactly 10 years ago, August of 2010, when Ben Bernanke, speaking at Jackson Hole, laid out the policy of the portfolio balance channel, right? Which was basically just
Telling everyone to buy stocks.
yes, but more importantly, it was just putting into action rather than theory Keynes's animal spirits, you know, probably Joseph Schumpeter too, but Keynes's animal spirits, which is, hey, get your asses out of bonds, and why? Because he knew he really wanted to tell pension funds to move dramatically. Like, what do you think about? But he couldn't say that.
And I've been following your blog for years, stalking you. I'm not sure you even knew I was there, because you are a massive respectful of Lacey Hunt, right? You are.
Oh yeah, I have great respect for him.
And Lacey in his last interview said if they jump the shark and buy equities, he said he won't buy equities, he'll buy guns. That was his comment.
Yeah.
But in the sense that his view remains that QE still is disinflationary. It's buying from future income, a future debt, without producing current income. That's his view. Is that right?
Yeah. Well, one of the classic rules and an analytical basis of the Austrian school, which is intertemporal misallocation, which you keep bringing demand forward. But that's what we do because we really don't have capitalism. We have debtism. We've rewarded debt for so long. And the way we tax it versus, I've always said, well, why do we tax dividends? Well, we allow a write-off for debt, right? It's kind of, to me, that's kind of silly. Why do you allow corporations to write off their borrowings, but when shareholders receive dividends, you tax the shit out of it, and that's for years. Now it's come down a bit, but that to me says we're not capitalists, we're debtists. We live on the continual incenting of people taking on more and more debt. Now there was an article. I could do some. There was an article on Bloomberg about the coming real fear of how many people are going to be really in trouble on their credit cards because they've been living off their credit cards. See, now, again, if I sat at the Fed and I sat in Congress, if I was Lizzie Warren, I would be moving today.
Okay. If that's the last question, I know it's 3 minutes before the open.
But I would be.
So if you were Biden, who would you appoint? Warren?
I can't say. I don't have to. But if I was sitting in the Congress right now, if I was on any of the finance committees, I'd be moving to cap credit card debt at 3% because that'll about cover the expense of it until you start, because that would at least provide some relief. Even before we went into this, people don't realize that the average interest on carrying balances forward on credit cards was like 17.5%.
Even Lucky Luciano didn't charge that much.
But that's reality. That's how high that stuff is. And people, and I said, cap it at 3%. Okay, let banks recover the expense of administration, but that you'd be helping Main Street for a change. We're going back to the idiocy of Tim Geithner. This is where you have to help Main Street. Main Street's the one who's struggling.
I'm with you. I'm with you on that.
They've already lost all their health insurance because all these people have been laid off and now they have no health insurance.
Well, look, every time the last 10 years, right? The reason why last year blew up in the repo market is because Millennium and Citadel were too leveraged. And it happened again in March this year. And it happened again in 08. And because they allow that stuff to happen, the system gets, the plumbing of the banking system gets fucked up. But these guys still buy their houses in Nantucket and everyone else gets fucked. I'm sorry, that's what happens.
No, listen, that's right. It's absolutely right. And this is what, you know,
because everyone else has to pay out these fuckers to do it.
You know what? And now, because you're on this site, I've had to start watching The Rake. With my wife watches it, so I have to pick up on learning my Australian better. Meanwhile, I will say, because I told Judd there was a guy who's going to start coming on. I'm going to give Judd his information and let him take. He was
The Rake's a very good show, by the way.
Yeah, it is. It is pretty good. It's sick as, you know, but I know the Aussies are sick people because it was a penal colony anyway, like Georgia.
No, the Pommies gave us this country, and it was a colony once, and it's still been amazing since I've been here. So
yeah, who was it? I think it was.
I want to come back to a serious question I asked you about 2 weeks ago, and then I recognise it's close to the opening. I still think there's a black swan in the market. I still think this whole Taiwan-China thing is getting hot. And I saw the Americans sent a chief medical officer this weekend to go over. And the Australians went over and met with Pompey last week, our foreign minister, and our defence minister. And our Prime Minister today, Scott Morrison, was talking pretty aggressive language against China being, you know, they have no rights on the South China Seas. So I don't think China's going to sit down and say this is happy days. What's your thoughts on that?
You know, my thoughts don't change. I look at Hong Kong, you know, let Chris Patton eat a little more food and gain some more weight as he absorbs the terrible deal that was made anyway to begin with. But that's just my thought. And Hong Kong's a sideshow. Taiwan will always be the issue. It's a serious, serious issue. Who I just had a discussion with somebody. When we had the discussion with Porter, and he agreed that Taiwan, I believe he agreed. I'm not putting words in his mouth. Alexandra can put words in his mouth. That's what marriage gets you. But I'm pretty sure that he sees as Taiwan as the really serious issue. And when China really wants to ramp up tension between the U.S., they'll move towards a much more vocal thing on Taiwan. Now, that's where the real tripwire is. It's Taiwan. So I watch and I listen to the language because that tells me more than anything else than all the pundits who are trying to figure this out. And again, last year when Neil Ferguson interviewed Kissinger about when the tensions ramped up in Hong Kong, and there was not one iota discussion. It was probably about a 40-minute, 50-minute interview, not one discussion about Taiwan. And I actually wrote a response to it. I said, how do you not ask Kissinger, especially about Taiwan? Because he's always known. You know, the issue is, will be with the United States risk thermonuclear war to meet its agreements with Taiwan.
Here, Michael's got some comments in here, Ira, if you're looking at the screen.
Yeah, I see Michael had something.
Can you share those with me? Can I look at it?
But that to me, and it went unasked, and I really was critical of it because, you know, that's been a very, 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 very sensitive and issue. And it's interesting that we're talking about this because today being August 6th, it is how many years? 75th anniversary of Hiroshima and Nagasaki. Now, I've been to Hiroshima, and I've been to the.
I as well. Yeah, it's
and if that doesn't move you to the destructiveness.
When I watched that thing in Lebanon last night, and I've been in Lebanon as well. I was there 3 years ago.
Oh yeah, you know
that bomb blast was apparently the 13th of what happened in Hiroshima.
Well, see, but I look at it, and when I look at those buildings, and the first things, because I wasn't really aware of it, because we were on when it happened, and nobody really talked about it. And then I went out to play some links. Then one of the guys I'm playing with, because I don't watch the news per se. I really not. I get my news through this chat room, through other places where people send me. I read, reading. But when I saw the pictures, it looked like the Murrah Federal Building in Oklahoma City. And you know what? But it was the same type of bomb. This was just on a massive scale, but it was ammonia nitrate packed into a truck. And it's the way it did its destruction reminded me, the whole front facades of buildings were just blown off.
Well, did you see that article from that British SAS guy who said it had to be set off with Semtex?
Really? No,
yeah.
No, I didn't say that.
It had to be set off with Semtex or it wouldn't have blown up like that.
You said it again, Judd. I missed that.
The guy, there was an ex-British SAS article on Bloomberg today where the guy, or last night, where the guy said it actually had to be set off, ignited with Semtex because a fire wouldn't have created that explosion.
Okay. Oh wow. Well, I mean, I was there 2 years ago. I had interest in restaurants and pubs for many years, and my business partner was Lebanese, so I was fortunate to go to Lebanon. And Lebanon back in the 60s and 70s was the Paris of the Middle East. It was a very prominent banking city.
Yeah, it was the banking center of the Mideast.
Exactly, and it unfortunately was just caught in this horrible geopolitical equation, Syria on the border and all the rest. And it's a beautiful, beautiful country, and with beautiful people. But half a Christian, half a Muslim, and I love them both. I don't care. I'm a Catholic, born and bred. I love anyone. I don't care. But the truth is, the civil wars there have been very destructive for the country for a long time.
Terrible. You know what? And when the Syrians went in there, the damage they did, the Israelis, bear responsibility too. But, I would argue that they were trying to be defensive in nature. Yeah, thank God there's no quick response to this one here. But it's not first of all, the French bear so much of the responsibility for all the problems because had they not gone to called in 22 in San Remo when they carved out all this stuff following the Treaty of Paris in 1919, and the French had to have their colonial hands in Lebanon and Syria, and the Brits placated them. All you do is have to go watch Lawrence of Arabia for some sense of it, but
yeah.
situations. Terrible.
Look, I really appreciate hogging the room, Judd, but I really want to encourage, people to challenge, tell me why gold will go down, because ultimately gold yen beaten again, and I think we're going to get an acceleration of price as opposed to it coming back, and I think people will be left wondering why they don't.
I agree with you, Andrew. This is Peter.
Yeah, sorry, Peter, go on.
I think it's, it doesn't recognize that gold is money and maybe the best money. And it's really underowned, and silver is incredibly underowned. And there's, I look at the speculative bubbles in a company like Tesla that became worth more than the rest of the globe, almost the whole global car industry minus Toyota. And that kind of speculative mass can flow into other assets. And they're not in it yet right now. So anyway, I agree with that statement.
Well, so go on, Lauren.
The only things that I'm looking for that could really push, well, we know that central banks aren't raising interest rates, right?
Yep.
So, but if they curtailed bond purchases, a quasi quantitative tightening will get some correction. Not anticipating that, but that's just one of those headlines. We would see a correction. And the other that I'm waiting for, and if people get a chance, I think the podcast that Judd posted that I did yesterday with FRA and two knowledgeable people, a little too gold oriented for me in a more an aggressive fashion. That's not the way that I look at it. But I don't think Tom Logano does that either. But IMF gold sales. And I raise this as a very serious issue at this time, because if I have to hear that the IMF is underfunded while they sit on the, they sit on the third or fourth largest gold hoard. Now, of course, it's not their gold, it's the member country gold. And the fact that they're not moving to monetize it is mind-boggling. So if we did see an announcement, especially the way that gold is so desired now, and I think the conversation here is absolutely point on, but that would be a correction that I'd be looking to buy in a big way.
I agree with you on that, but I think it's like Stan Druckenmiller's great call, right? A few times in your life you see a fat pitch. I think it's one of those fat pitch. I was working for Nomura in Singapore when Abe was elected in 2012.
Yeah,
that was a fat pitch when Dolly was 82.
Yeah,
because he went, enough's enough, right? We're getting destroyed by Korea. Korea 1 was completely out of line, and he went, absolutely said, we're going to weaken the yen. Finally, right? The yen was 80 to the dollar, right? Not 105 where it is now, 80 to the dollar.
yeah.
And everyone, I looked at someone and said, this thing's going to go crazy. And someone said,
that's not 2004. That's when, that was the
2012.
12, right.
And sitting in Singapore working for Nomura, and Abe was elected for the second time, and he said, enough's enough.
Right, that's right. So it was the 3 arrows. Now, it's interesting you say that, because if you went into my blog archives, that was over a weekend, a G7 meeting, by the way. You can.
I remember it. It was November the 11th, 2012. I was sitting there, and I said, "This is going to jump." I was sitting next to this Japanese guy, and he said, "Because everyone forgets, Abe was the grandson of the guy that was pretty
Kichi.
Yeah. And
wait,
he was the
go look. There's an interview on Monocle. I don't know if you listen to Monocle. My son, this is unsolicited. My son has the only English biography. In fact, you can go get it now. You can order it. It's called The Iconoclast, and it's a biography of Abe.
Yeah, look, Abe. I'm going to get that. I'm going to get that book, Ira, because I think that's a really interesting topic. So, but
I don't get a dime from it.
I know, sure, but I am going to get the book.
Sorry, Peter, go on.
Yeah, but he's off the payroll, Ira. You get a lot from it.
Yeah. You know what? They're never off the payroll. No.
All right. The grandfather was an imperialist, right? He was a nasty piece of work.
No, he was the go-to guy. He was very rapidly rehabilitated. He was an important official in the imperial Japanese government, and he was implicated in war crimes. But he was still politically powerful and became the go-to anti-communist guy for the American occupation government authority, and he was rehabilitated.
Wait, I'm going to take him out, James. I'm going to take him.
And then it's interesting because later on, Abe's Another subsequent prime minister was actually, what's his name? Kisco, was that his name? Or something like that? His was his brother, but he had a different name. He was actually his brother. So Abe's great uncle and grandfather were both prime ministers since World War II. Interesting.
Yeah, it's a dynasty. So if you go to Monaco, last week or 10 days ago, they did an interview with him, with my son. It's really good. And he covers all of this, talking about the dynasty. So I actually texted him, and I actually got an answer back, which is highly unusual that I get text back. Because when you look at the rehabilitation of his
Dalian was 265 one day, right? And the dollar mark was, where it was.
Yes.
And it was like, and I sat there going, and everyone said, everyone.
That was October. That was October.
Currencies don't move. You're an idiot. I said, are you kidding me? And I bought a $100 yen call for like 1 cent. I said,
wait.
And I go, and I, made some good money, and I got lucky. But because I remembered the days when dollar yen would fall 4 or 5 big figures a fucking day.
In an hour, in less, there would be nothing there.
And everyone forgot about that. And then, to Peter's point, in came, a new prime minister, and he made it very clear. He said, "I've had enough. We're going." And my mate said to me, "You know what that means? He's in a wig in the end."
Andrew, Judd, if you can go to the archives, I think it was October 15th. There was a G7 meeting over that weekend. I read the language, and it was okay. That's what, and I wrote a blog. There's a blog exists. You can read it, Andrew. October 15th or 16th of 2012.
I read your blogs all the time, mate.
It's in the archives. So I wrote about it because I said, it's like they're giving a wink and a nod to the Japanese. This was after Fukushima, of course, to weaken the yen, because that was the language in the communique. I walked in. You're going to love this story. Monday morning, I walk in. I go to the floor, and I see the guy who does my currency stuff when I'm not doing it myself electronically, and I tell him, okay, to buy 200 125 puts. Okay, you go ahead, Judd. Put up the chart in the futures bit, or on the Globex, whatever. It doesn't matter. From October, you can see it. Let's see, October of 2012. Where were we?
Well, the futures were up at 131.
That was January. You got to go to October. So put up a quarterly. You'll see it.
Well, that is a quarterly. Okay, so there's April.
Okay. Yeah, all right, next one. Yeah.
And right there, October, 128,
right.
45.
I buy the 120, 200 of them.
Wow.
I doubled my money in about an hour. I said, oh, that's enough. Then I just got outright short the futures. And he said to me, because Frankie, Judd, Frankie said, he says, you never do this. You always will sell it. You don't trade options like that. I said, Frank, did you read it? He says, yeah, I read the blog. He said, I thought it was pretty good. But that's another one of those trades that haunts me, because we went right down to 104 in the futures. So we went from, Andrew, you're 76, 77, probably up to 95 pretty quickly.
Oh, mate, it happened in 6 weeks. It was over for March. And that's why I think the thing that people don't overlay, and Howard was one of my annoying, people, seasonality is a big thing, right? And it doesn't always work. And if you allow that to become your process, you're an idiot. But if it's just your process, good luck to you.
Well,
and gold this year has been on the money. 26th of June, and the gold seasonality ends on the 1st of September. So we've still got 3 weeks to go. And I think gold will surprise everyone on the upside.
Well, you know what? Now we're getting through August, so the early deliveries are done. And the interesting conversation on that podcast yesterday was the deep discussion about the SLV and the GLD and them leasing a lot of gold rather than owning it. Very interesting discussion. And I'm not, it'll lead me to go investigate that more, which I will do, and I'm sure others will too. But it's one of the things that you get out of it. Well, one thing you learn about the yen, and Andrew, you know this as a bank trader, when a move of significance coming, you will see the BOJ get active at night to allow Japanese institutions to get pricing into the market. Would you agree with
so I have a very good question to retort you here. It's not my podcast, but nor my platform. So, if Ira,
Yep.
we went back to March, and we now know the market's made new highs after all the risk off, where would you think dollar yen should have been? So the dollar yen was around 107, 108 when the world went to shit in March. Where would you think now it would have been if I said the Nasdaq's at a new high? Where would you think it would have been?
Great.
Now, my answer would be higher than the price prior.
Well, you know, we've talked about this quite a bit. And, you know, for me, for this whole dollar move, which has taken place, the yen had to go with it. It could not be, you know, even though euro yen has rallied dramatically too, but the yen is slowly on the move. But I would argue, and that was my point, is that when you look for real yield, the yen is probably a much better value than any other currency on real yield basis.
I'm a late, you know, I wish I was here before because I lost too much money on the way back. I made a lot of money on the way down and I lost it back on the way back. And I did truthfully. That's just what happens, you know. You learn as you trade. But the weakening dollar story and the, you know, the raw pool and the, you know, the dollar milkshake theory, God, you know, it all gets confusing. But over time, the yen it used to be, if it was risk on, you'd take it as a carry, risk off, you'd go to it, right?
Yep.
So you're suggesting you want the dollar pure reflation of the world, assets to be right, everything had to go? Was that your theory?
Yeah, that's been my argument for 7, 8. You know what? And I think you and I discussed Raul Paul, and I got a lot of pushback because, you know, all his fans, when I was so
you've been right on this call. There's no question.
And he was just dead wrong. And he had an interview with Russell Napier, in which, you know, they differed, or somebody was on it, and they differed. It may have been Russell, it may have been somebody else, and they differed. And somebody, you know, kept sending me that too. I go, I don't need that validate. Here's the argument. Now, Chris Whalen did a piece this way. I don't know whether you read his stuff.
No.
Chris is really good, but he has.
How do I find that? How do I find that?
He's talking about this week. You know, and there is no carry trade to go on now. That's why the dollar really is suspect, because so much.
It's so good.
Yeah, it is good. It is good, and you get the sense that Powell would like to say. Of course, he'll never say it. Mnuchin, you know, he's too busy talking about other things, but the financial aspect of the dollar, and this is what's so dangerous, and what the gold is sniffing, is that the financial, you know, the dollar as a trade vehicle and the dollar as a financial vehicle are two different stories, which is why, you know, I took Trump to task when he talked about back in May about, oh, a stronger dollar is, you know, this is good. And I figured he had probably talked to Navarro. I think I was in this chat room at that time. And I said, oh, he must have, that's the Navarro doctrine. Whatever hurts China is good for the US. So Navarro must have convinced Trump that a strong dollar was hurting the Chinese. So, all of a sudden, for the first time in 3.5 years, Trump made the comment that a strong dollar was good. I didn't understand it. It couldn't have been more ill-timed. more.
Yeah, I read your blog for a long time, and I was a stealth, sort of follower. I mean, I agree with you. Knew what they needed to do, but they also know. But I think this is now a strategic play, geopolitical play. They can't have it getting out of control. And if the gold goes out of control, I don't think that makes them look good. You know what I mean? So they're gonna take some shots at everyone. And I say this, and I agree with Peter. I mean, I think gold will become the new Tesla. I think it will. I think because I think they've lost. I think the genie's out of the bottle. And now, in saying that, it's going to be a very volatile bottle because good luck with silver. It trades at 60% vol.
Right.
I think, and that means it goes up and down a shitload. So, but I think judge numbers have been extraordinary this last 2 weeks.
Stop complimenting them. You know what? It's enough for.
No, I'm saying because it's true. Because when you have a 60% vol and you can lean against a number, it's pretty powerful. Because if you get it right with a nice edge, you get some powerful upside, right?
Yeah, he knows.
It's gold need to be big, Ira.
And gold's going to go. I think gold's going to go there, and gold miners will too, because I think the genie is out of the bottle.
Well, yeah, we have a lot of people chasing it now. That's why, I trade it now. I don't hold it. I really have no position. I can trade back and forth all day long, where I was carrying positions for so long. And again, I was very open. November of 2019 was a terrible month for me, and all I was right. And I on this site, we talked about it quite a bit. I said, this is one of those lessons you learn. Being early and being wrong. November was the worst month I had in decades.
Yeah, and they were selling the gold with risk off because they were raising cash.
Yeah. So I got, and I said, and people said, "Well, you were right." I said, "Yeah, you read everything I wrote. It was dead right on target, but my trading was terrible." But I said, I cut my size down and I lived to fight another day. And now, here it is, 7, 8, 9, 10 months later. And you know what? Way above that high water mark, that I came off of there. But that's how you, protect yourself as a trader.
Oh, it's a long game. It's a marathon.
Oh, yeah. And then some.
Yeah, and even with the gold and silver now, I mean, the only way you can almost sleep at night is just buy some calls.
Yeah, and the vol is so expensive. It's just,
I know, but it's the only way because you know how much you're going to lose if something happens in the morning.
You can.
Yeah, but I don't. But that's
you can lean against your numbers, Judd. I'm not being sycophantic. You can lean against it if you have that. I mean, some people have a view, and I have one. I hold a lot of it, and because I think it's part of the new system. I think we're going through a new change. I think it's a fascinating time. I'm a believer that we're good people, and we'll find a better change than we are now. And I think gold in the system will be part of it. It's always been part of it before. Why won't it be part of it again?
By the way, Bitcoin just breached 12,000 here this morning.
There you go. I own a little bit of that, but I don't pretend to understand it. But Peter, I do understand. I own a little bit of it, just in case.
Yeah, I accumulated a position in that 4 or 5 years ago. So.
And Freeport held too, big time, this morning.
sure did.
Yeah. So that's the other one.
My parting question, Ira.
Yep. And then I'm going. I have to go do some shopping.
Okay, sir. So I've now appointed you as the chairman of the Fed Reserve.
Okay, thank you.
What's the end game and how do you fix this to make it equitable?
Okay. I'll give you first of all, the way they do forward guidance is a mistake because I've learned throughout my life of watching this. I would put a 180-day time period on any policy I put in place and make it truly market dependent. Okay. So if we see and I'm not moving the goalpost. So if we see unemployment get down to, these types of levels, I'm telling you, I'm going to start pulling back. So the market knows there will be no taper tantrum because you delineate in real time. This is what I'm going to do. And they don't do this. They don't do this. And because you put 180 day in the way it is, well, if things don't change, we're going to go for another 180 days. So you do these time periods. Number one, that's what I'd be doing. Number two, to jump on Druckenmiller in a positive way, but I have to say I was there first with Santelli in July of 2018. But what Stan calls the double shotgun, I'm only going, either I'm raising rates when I start to curtail this, or I'm stepping back and embarking upon some type of quantitative tightening. Not both, one or the other. And I'm going to say, look it. And I think this is one of the things that Powell has done right, because now the market is understanding the question that I've asked is that if we're at 9% unemployment, 6% inflation on an annualized basis, come December, does the Fed raise rates? No. And you're going to tell the world, look it, we're going to run hotter inflation. Understand that. And you know what? It was interesting what came out yesterday, and I'll jump to that, but I would be very forthcoming about that. Then there's no surprises. It's when you get in trouble when you surprise the markets. Lay it out and let them work with what you've laid out. That's what forward guidance should be, but it should have a time mechanism to it, because that works better than having to all of a sudden shift. If the market is aware of the things you're going to do, that's what I would do. And I would spend a hell of a lot of time explaining to people why the inflation is important with the dollar reserve status on a global basis and its importance for the global financial system. Good, bad, or different. One of the bad things of Bernanke, because there is no, as Milton Friedman famously says, there is no free lunch, is, and I was talking about him this morning because he has a piece on Project Syndicate, Raghuram Rajan from the University of Chicago. You have to deal with these things and you have to be pragmatic. There's too much modeling. You know what? If you're going to build models, and this is what the Fed relies too much on, all models are built on certain assumptions. Tell me what your assumptions are. It's why I think they've gotten the unemployment so bad, terrible. I've been battling the Phillips curve and output gaps for years. Even when I was in graduate school, I read so much about the Phillips curve. But assumptions in the Phillips curve, they have to be wrong in a globalized economy. See, in the 60s and 70s, the world economy was not that globalized. We were broken up into probably three regions: the Soviet region, of the sphere of influence of the Soviets, the sphere of influence of the U.S., and then we had the non-aligned nations, of Sukarno and Suharto in Indonesia. These were important, but you didn't have, and there was still a lot of capital controls in place. Once capital is freed up to basically arbitrage labor costs, okay, and that's exactly what it does, you can't rely on the Phillips curve, which is a domestic-based model, to be any type of reliable data. It loses its significance. Listen, prices, the Fed was able to get away with a lot of what it did is because of the dynamic nature of the Chinese economy. Once, Deng unleashed that force of massive workers, and then, of course, the Berlin Wall comes down, which unleashes the Eastern Europeans. So you had so much global pressure on wages that inflation couldn't get up and running, right? So again, it found its way into all kinds of bubbles. Money did. Because interest rates, everybody kept scratching their head going, where's the inflation? Alan Greenspan, right? In the 90s. Long-term capital, I would severely argue, was miscalculation of the models, which, for which they wanted to actually put their theories to work. And we see how well, when they put and made some big bets that didn't quite work out. So
I knew I said I'd say no further question. Have you read Danielle Martinez's book, Fed Up?
no, I haven't, and I talked with Daniel quite a bit. We've done several podcasts, but I have never read the book.
I think she's impressive. I think this is a great insight to how that place works. I'd encourage, to what you said. Okay, you have my vote as the Fed chair.
Okay. All right. Well, you know what? I don't know who we would elect who would put me in, but let me get to work on it.
We'll all vote for you.
Anybody who knows me, I'll never write a check to any fucking politician anyway, so that's my ability. Why are we laughing?
Oh boy.
No, I'm encouraging it. Thank you. I've hogged the room enough. All the best.
No, thanks,
Okay.
guys.
All right,
It
Judd,
was a great
I'll
conversation.
keep this open, but I'm going to go do some.
Okay. I'm gonna turn off the record button.